Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again, this time on euro currency. Today we have prepared the weekly report. So overall fundamental situation right now on the market stands extremely interesting, and factors that now are driving the market is also really fast changeable, and situation is changing actually day by day. From one point of view, this is the good sign because this provides the volatility to the markets and creates some trading opportunities. But the negative sign is that, well, these factors that's totally out of our control, because the new information we get only as some surprise, some not expected event in the news, in the rumors, in some speeches of the representative persons. That's the things that make overall process of trading is difficult currently. Well, and the factors are mostly stands the same. So as we discussed last week, this is the Biden leadership and the providing of the stimulus. But today, in the weekly report, we have tried to dig a bit deeper with the background of the event and trying to take in-depth look on the reasons why it's so difficult currently to achieve agreement on the stimulus. What stands behind the Pelosi position? Why she doesn't come on a compromise with a really good offer for 1.8 trillion of the pact that is offered by the Donald Trump, while the Democrats, as you know, would like to get 2.2 trillion. Why they do not come to compromise? And we actually have answered on this, because the reasons for that is purely politics. Because Pelosi doesn't come on agreement, by our opinion, because she expects the victory of Biden. In this case, the winner will take it all, and the Democrats will become the absolute hero who provides the big pack of the stimulus to the markets. They become the heroes. But the problem is that we are not sure that the Biden will win, and in this case, they could lose, Democrats, everything. And our reasons suggest that the polls could be wrong with the assessment of the advantage of the Biden in the rally in the president's run. Stands mostly on the experience of the previous elections, where everybody forecast the victory of the Clinton, but the result was stunning, and Clinton has lost the elections. That's because of the most polls are based by some mass media that belongs to Democrats. And Democrats creates the environment when the people make some comfortable to announce that they intend to vote on Republicans. They create, the mass media creates the environment where people feels like some white raven, so it's not comfortable to announce it. But they talk that they intend to vote for Democrats, but they vote for Republicans in reality, and that creates some divergence and skewing in the polls results. Currently, we could get the same, especially with this new feature of the voting by the mail. And in our ultimate scenario, markets are waiting the cold shower with Donald Trump victory, and it's promising big rally on the United States dollar and collapse in all markets. Because currently, the big part of the Biden victory is priced in already in the stocks, and a lot of risky assets, and if it will not happen, that will be just the stunning result. So, taking it all together, we have tried to make the conclusion about how it could turn and what could happen in the current situation. So it's really interesting, and you could read. It's not really a very big report, but some very interesting moments exist there. Speaking of the short-term situation, guys, and currently what we see on euro, facts are a stubborn thing, and as a really big gap between the positions of the Democrats and the Republicans on the stimulus pack. while Biden will keep the gap, at least in official polls, compromise is not possible, we think. That's the moment that will press on risky assets in euro in particular and support the United States dollar. Second moment is the virus lockdown. Maybe it will not be as strict as in the spring, but some lockdown probably will be, and that definitely will make the negative impact on the situation. That also will support the United States dollar. Putting it all together and looking at the recent safety report that suggests the market participants are closing positions in euro, makes really phantom chances on upward action on euro currency. That led us to suggest on the weekly chart downside action somewhere to the 114 area in a medium-term perspective. Here on the daily chart, we see alternative scenario. I mostly put it here just because of the theoretical chances existing. Technical picture tells that overall scenario is not cancelled, not destroyed totally yet, because as we said previously, market stands at the 618 support. This is actually last bullish chance, last bullish outpost for establishing of the upward action. And on Thursday, we still have got the bullish grabber. That will be crucial point for the market. This combination, well, it's simultaneously simple and difficult. Simple because if you intend to take the long position here, your stop will be very, very close, and you will not get the big loss on this trade. Second is because we definitely know where is the validation point stands. But the difficulty comes in low chances on the success. The chance this market will show this upward action currently, at least the situation and information that we have currently, looks phantom. So hardly we will get it. Still, we need to create some plan that let us definitely tell what is going on and whether this upward action is possible or not. For that purpose, we will use the hourly chart. So take a look what we have on the hourly chart. That's our ABCD patient, the COP target and agreement that we have around major support on the daily chart. That's great. So we have an agreement support. We have the reaction on this agreement support that we have discussed on Friday morning. We said it's probably a pullback, some should happen. But with this upward action, market has completed just, as you can see, the harmonic swing up. And then starts dropping again. Yes, here we have, as you can see, bullish divergence. That's nice, but that's not definitely enough. To prove the ambitions, this market indeed really would like to go higher, market has to break this tendency. And that should happen by some bullish pattern to form. So low lows, high lows, standards should be broken. And for that purpose, we think that we could keep an eye on a possible head and shoulders pattern here. It's most probable could happen if bulls will take the lead again on the market. So if market will climb here back to the 1770 area, in this case, we could consider 1730 area as a crucial for position taking. So bulls could keep an eye on this level for taking the long position with possible upward continuation. So appearing on the hand and shoulders will be at least something to tell you that market is indeed has chance to reverse. Bears, in turn, should take a look at the same levels, but in the opposite purpose. So, for example, breaking here right down below this level, tell you that market's going lower, we will not get any upward action. That's the first scenario for the bears. Just keep an eye on the breakout to the lows. Second, keep an eye on the same level, but for the failure purposes. So, for example, if market will reach this level, but fail to reverse up and will start dropping and get back to these lows. That will be also the sign that bears taking control over the market and this market is ready to drop more. So everything, as you can see, is turning right now on intraday charts around this support, this 117, and around the patterns that we could see within the 2-3 sessions maybe. That will tell us everything, what to expect. But as I said, the fundamental background stands not in favor of the rally on the euro currency. So fundamental suggests downside continuation mostly. So let's see how situation will develop and what will happen next week.